Welcome to the Property Wealth Podcast, where we explore practical real estate investing advice for those of us over 40. You know, building long-term wealth doesn't have to be complicated, right?
Absolutely, Sarah. And today, we've got a really interesting topic to dive into. Furnished Finder for travel nurses. It's a great way to tap into a niche market that's growing.
Yeah, it really is. With the demand for short-term rentals skyrocketing, especially in healthcare, this could be a goldmine for investors.
Exactly. We'll talk about what Furnished Finder is, how it works, and why it's particularly appealing right now.
And we'll also touch on some practical tips for getting started, plus the potential pitfalls to watch out for so you can really maximize your investment.
That's right. The goal is to give our listeners actionable advice they can use right away without feeling overwhelmed.
So whether you're already in the real estate game or just starting to explore, stick around as we unpack this exciting opportunity.
Let's jump in. First, let's discuss what Furnished Finder actually is. You know, Sarah, when we talk about furnished rentals for travel nurses, it really highlights why this strategy is so relevant right now, especially for folks over 40. I mean, many of them are starting to think about retirement timelines, right?
Exactly. It's like the clock is ticking, and they want to make sure they're in a good spot financially. With the way inflation is moving, real estate can be a strong hedge.
Absolutely. I've spoken to a couple of investors who are in their late 40s, and they've shared how the rising costs of living have made them rethink their investment strategies. One guy, let's call him David, he was sitting on a couple of properties that weren't performing as well as he hoped.
Oh, I can imagine that's frustrating.
Right? So he decided to pivot and look into furnished rentals for travel nurses. He realized there was a huge demand in his area, especially near hospitals. The potential for higher rental income was just too appealing to ignore.
That's a smart move. And it's not just about the income, but also the flexibility it offers, isn't it?
Exactly. You know, if he wanted to travel or spend more time with family, he could easily manage this type of property remotely. Plus, the short-term nature of those leases means he isn't tied down for long periods.
And that can really alleviate some of the stress that comes with traditional long-term rentals.
For sure. And while we're at it, let's not forget the emotional side of financial security that comes from making smart investment choices. I mean, people want to feel stable, right?
Definitely. I think that's a big part of it. So many folks over 40 are also thinking about wealth transfer to their kids or grandkids. They want to leave behind something substantial. Something that can really help their family.
Yes, and real estate can be a fantastic way to do that. I know a woman, let's call her Linda, who started investing in furnished rentals a few years ago. She wanted to create a legacy for her children.
That's such a powerful motivation.
It really is. She's already started to see how much her investments can grow and how they can provide stability for her family. She's not just thinking about her retirement. She's thinking about their future too.
That's inspiring. And in today's economic climate, where market shifts are pretty common, having that kind of security is crucial.
Absolutely. A lot of people in their 40s and 50s are finding that traditional retirement plans, like 401ks, aren't as reliable anymore. They're realizing that diversifying into real estate could be a more stable option.
Right. And with the economy being as unpredictable as it is, having assets that can potentially appreciate over time is invaluable.
Exactly. And the current trends show that nurses, in particular, are often looking for furnished accommodations. I mean, they travel for assignments, and they prefer places that are move-in ready.
It's like a perfect match.
Exactly. So, for someone like David, he could furnish a property, market it specifically to travel nurses, and suddenly he's in a position to earn more, while also providing a service that's in demand.
And that's a win-win, right?
100%. Plus, there's the added bonus of being able to adjust your pricing based on market demand. If there's a surge in travel nurses in the area, you can capitalize on that.
Yeah, it's all about being adaptable.
And let's not forget about the tax benefits. Furnished rentals often come with various tax deductions that can help offset income, which is especially important when you're nearing retirement age and want to maximize your savings.
That's a great point. Many people don't realize how much those deductions can add up.
Right. And it's not just about the numbers. There's a sense of empowerment that comes from taking control of your financial future. When you start seeing the benefits of your investments, it really boosts your confidence.
Absolutely. I think that emotional aspect can't be overlooked. Feeling secure in your financial situation can have a ripple effect on every part of your life, right?
For sure. I've seen it. People become more engaged with their families. They take more risks in other areas of their lives because they feel financially stable.
That's so true. It's like when you have that financial cushion, you can focus on what truly matters.
Exactly. And as we look at the strategies moving forward, it's important to note that getting into furnished rentals isn't just about the property itself. It's about building a sustainable plan that aligns with your personal goals.
Yes. So let's dive into those core strategies for anyone looking to tap into this market and create a solid foundation for their future.
So, let's dive into some core strategies when it comes to using Furnished Finder for travel nurses, yeah? One of the first things to consider is the 1% rule.
Right, I've heard about that. Can you break it down a bit for our listeners?
Sure, the 1% rule is pretty straightforward. It suggests that the monthly rent you can charge should be at least 1% of the purchase price of the property. So, if you buy a property for $200,000, you should aim to rent it out for at least $2,000 a month.
That makes sense. But it's not just about hitting that number, right? You have to consider other expenses too.
Exactly. You want to factor in things like property management fees, maintenance costs, and, of course, your mortgage. It's important to run the numbers thoroughly.
So how would you calculate that?
Well, let's say your mortgage is $1, $200 a month, and you estimate about $300 for maintenance and management. That's $1, $500 total. If you're charging $2,000 in rent, that gives you a nice cushion of $500, right?
Yeah, that sounds good. It's about cash flow.
Exactly. And that leads us to the 50% rule, which is another useful guideline. This rule suggests that, on average, about 50% of your rental income will go towards expenses.
So if you're making $2,000 a month in rent,
then you should budget about $1,000 for expenses. That includes all your costs like utilities, maintenance, and property management. So if your expenses do come in lower than that, you're in a good position.
it sounds like a solid way to gauge if the property is worth pursuing.
For sure. And then there's the cap rate, which stands for capitalization rate. It's a measure of the property's potential return on investment.
How do you calculate that?
Simple. You take the net operating income, which is your total income minus operating expenses, and divide that by the property's purchase price. So if you have a net operating income of $24,000 and your property costs $300,000, you divide $24,000 by $300,000.
Got it. That would give you an 8% cap rate, right?
Exactly. A higher cap rate usually indicates a better return. But, it's not the only metric to look at. You should consider the property type and location, too.
Speaking of property types, are there specific ones that work better for travel nurses?
Yes, definitely. Single-family homes or small multi-units tend to be popular. They offer the privacy and comfort that travel nurses often look for. Plus, you can furnish them nicely to make them appealing.
And what about location?
Look for properties near hospitals or healthcare facilities where travel nurses commonly work. Proximity really matters. If a nurse can walk or take a short drive to work, that's a huge plus.
Makes sense. Now, what about evaluating deals? Should listeners have a checklist?
Absolutely. A deal evaluation checklist can help keep things organized. Start with key factors like purchase price, potential rental income, expenses, cap rate, and location.
And what else should be on that checklist?
Consider the property condition. If it needs repairs, factor those costs into your calculations. Also, think about the market trends in that area. Are property values rising?
Can you give an example of how to apply this?
Sure. Let's say you find a property listed for $250,000, and you estimate potential rent at $2,500. First, check if that rent meets the 1% rule. It does, right?
Yeah, but then you'd need to factor in your mortgage and other costs.
Exactly. If your mortgage is $1,700 and you have $300 in other expenses, your total is $2,000. You're still cash flow positive. But let's say you notice the area has a declining market.
That's a red flag, isn't it?
Definitely. You'd want to dig deeper. Look at vacancy rates and how fast properties are selling. If they're sitting on the market for too long, it could mean trouble.
And financing options can also vary, right?
Yes, traditional loans are common, but you might also consider short-term rental financing or even a home equity line of credit if you have equity built up in another property.
That could give you some flexibility.
Exactly. And don't forget about the benefits of partnerships. If you're new to investing or just want to reduce risk, teaming up with someone can be a smart move.
Right, sharing the financial burden can make it easier to take that first step.
For sure. Now, as we wrap up this section, it's also important to be aware of common pitfalls to avoid when investing in this space.
Definitely. Let's dive into that next. What are some of the most common mistakes you see people make?
You know, Sarah, when it comes to investing in something like Furnished Finder for travel nurses, there are definitely some common pitfalls that can trip people up.
Absolutely, Mike. It's easy to get excited about the potential income, but there are real mistakes that can happen along the way.
Right. One of the biggest issues I see is over-leveraging. You know, people get so eager to dive in that they take on too much debt.
Yeah, like they see a property they love and think, I can make this work, without really considering if their cash flow can handle it, huh?
Exactly. I remember a client of mine who bought a duplex, thinking he could rent out both sides as furnished rentals, but he stretched his budget too thin.
Oh no.
Yeah, his mortgage payments were way higher than the rental income he was bringing in. He ended up having to dip into his savings just to cover the mortgage every month.
That's such a tough spot to be in. So what do you think could have helped him avoid that?
Well, he could have done a more thorough analysis of his cash flow before jumping in. It's crucial to calculate all expenses, not just the mortgage, but also property management fees, utilities, maintenance.
Right, and sometimes people forget about those hidden costs that can sneak up on you.
Exactly. Like even things you might think are minor can add up fast. I had another client who didn't factor in the cost of furnishing the units.
Oh wow, I can see how that would be an oversight.
Yeah, it was a shock for her when she realized she needed to spend several $1,000s just to get the place ready for tenants. So taking a more detailed approach to budgeting is essential.
That makes a lot of sense. And then there are bad tenants, which can definitely complicate things, right?
Oh, definitely. I've seen investors overlook tenant screening, thinking, it's just a short-term rental, how bad could it be?
Yeah, that's a risky mindset.
For sure. I once had a colleague who rented to a nurse who looked great on paper but ended up being a nightmare. She broke a lot of the rules and left the place in shambles.
Ugh, that's frustrating.
It really is. The cost of repairs and lost rent while he fixed things up was a huge hit to his bottom line. It's super important to do thorough background checks and reference checks, even for short-term rentals.
So you're saying it's not just about filling the space, it's about finding the right tenant.
Exactly. You want someone who respects your property and your investment.
And what about ignoring cash flow? That seems to be a common theme among investors too.
For sure. I had another investor who was so focused on potential appreciation that he completely ignored his cash flow. He bought a property in an up-and-coming neighborhood, thinking it would skyrocket in value.
But the cash flow just wasn't there?
Right. He ended up with negative cash flow every month, which forced him to sell the property at a loss when the market didn't behave as he expected.
That can be heartbreaking, especially when you think you're making a smart decision.
Exactly. The lesson here is to prioritize cash flow over speculation. Always have a safety net.
That makes a lot of sense. And how about timing the market? I know a lot of people have that on their minds.
Yeah, trying to time the market is like trying to catch lightning in a bottle. I had a friend who waited for the perfect moment to invest.
And how did that work out for him?
Well, he ended up waiting for years. By the time he finally bought, prices had skyrocketed, and he missed out on a lot of good opportunities in the meantime.
So instead of trying to time it, it's better to focus on finding good deals, right?
Exactly. Look for properties that cash flow well and meet your investment criteria, regardless of the market's ups and downs.
And then there's the issue of hidden costs, which can really catch people off guard.
Yeah, I've seen it happen too often. An investor I worked with bought a property, but didn't account for things like property taxes, insurance increases, or HOA fees.
Those can be real budget busters.
For sure. She was hit with a massive tax bill the following year, and it really threw her financial plans off course. If she'd done her homework, she could have either planned for it or even negotiated a better deal.
So it's all about doing your due diligence, huh?
Absolutely. Always do a thorough analysis, and don't forget to ask questions about any potential costs that could arise down the road.
And it seems like the key is to be proactive rather than reactive.
Exactly. Look for red flags early. If a property seems too good to be true, or if the seller is pushing you to make a quick decision, that's a sign to pause and evaluate.
Yeah, trust your instincts, and if something feels off, it's okay to walk away.
Definitely. There are always more opportunities out there. Just keep your eyes open and don't rush into anything.
So if someone's made a mistake or two, what are the next steps for them? How can they recover?
Great question. First, take a step back and reassess your portfolio. Identify what's working and what's not. Sometimes, it might be worth selling a property that's dragging you down.
And then maybe look for properties with better cash flow opportunities.
Exactly. Focus on building a solid foundation before expanding. Set clear goals and stick to them. And don't be afraid to seek advice or mentorship.
That's really important. Learning from others can save you a lot of headaches.
For sure. So keep learning, keep growing, and always remember, it's a marathon, not a sprint. So now that we've talked about how Furnished Finder works for travel nurses, let's dive into some immediate steps listeners can take to get started.
Yeah, I think that's really important. I mean, just knowing where to begin can feel overwhelming.
Absolutely. So first things first, if you haven't already, sign up for a Furnished Finder account. It's pretty straightforward.
Right. And once you're in, you can start browsing properties. But I'd also recommend looking at your local market, too.
Exactly. Tools like Zillow can give you a solid overview of rental prices in your area. You can search for similar properties to see what they're renting for.
And I hear the Bigger Pockets calculator is fantastic for analyzing potential deals.
Yes, the Bigger Pockets calculator is great for that. It helps you run the numbers on a property, whether you're looking at cash flow, ROI, or long-term appreciation.
Great tool. And for those who are just starting out, it might feel a bit daunting. Any tips on how to ease into it?
Well, one habit I recommend is to analyze at least one deal per week. Just set aside a little time each week to look at a new property.
That's a manageable goal. And over time, you'll get a much better sense of what's a good deal and what isn't.
Right. And don't forget about local meetups. Connecting with other investors can provide valuable insights.
Those networking opportunities can really open doors, can't they?
Definitely. Plus, you might find a mentor or someone who's been where you are and can offer guidance.
And what about podcasts or books? Any specific recommendations?
For sure. I'd recommend The Book on Rental Property Investing by Brandon Turner. It's packed with actionable advice.
That's a classic. And podcasts like Bigger Pockets Podcast can be super inspiring too. Hearing real stories from investors can really motivate you.
Absolutely. And another tool to consider is Rentometer. It's useful for checking rental rates in specific neighborhoods.
Oh, I've heard of that. It's great for getting a quick sense of whether a property's rent is in line with the market, right?
Exactly. And if you have access to your local MLS, that can be a goldmine for data.
For sure. Being able to see what's actually selling and for how much is invaluable.
So combining those tools with your weekly deal analysis, you'll start building a solid foundation.
It's like creating your own little research hub.
Yes. And don't forget, it's important to start where you are. If you're feeling overwhelmed, just focus on one thing at a time.
Love that. Small, consistent steps can lead to significant progress over time.
Exactly. And as you get more comfortable, you can expand your focus. Maybe even start looking into short-term rentals or other options.
And the more you learn, the more confident you'll become in making decisions.
Right. And remember to keep your mindset positive. Real estate is a journey, not a sprint.
So true. And it's all about building those habits that support your goals, right?
Yes! And being proactive in your learning is key.
I think listeners will appreciate that. And it's empowering to know there are so many resources available.
Definitely. With the right tools and a little persistence, anyone can get started on this path.
So those are some practical first steps. Now let's bring this all together.
Well, As we wrap up this episode, let's quickly recap some key takeaways from our discussion on Furnished Finder for travel nurses.
Yeah, definitely. First off, I think it's super important to remember that there's a growing market for short-term rentals, especially with travel nurses needing those furnished places.
Absolutely, and that leads right into the second point, the potential for consistent income. These travel nurses often have contracts that last a few months, which can really help stabilize your cash flow.
Right. And it's also worth noting how valuable location is. Having properties in areas close to hospitals or medical facilities can really make a difference in attracting those tenants.
Exactly, and let's not forget about the ease of using platforms like Furnished Finder. It simplifies the process for both landlords and tenants, making it a win-win for everyone involved.
For sure. And, investing in real estate isn't just about the here and now. It's about building long-term wealth. When you invest wisely, you're setting yourself up for a more secure financial future.
Well said, Sarah. It's all about creating those opportunities for yourself. And remember, even small steps can lead to bigger results over time.
If you found today's episode helpful, make sure to like, subscribe, and share your biggest takeaway in the comments. Or if you have any questions, we'd love to hear from you.
And don't forget to share this with someone over 40 who's looking to dive into property investing. It could really make a difference for them.
Next time, we'll be diving into Corporate Housing Higher Yields Guide. You won't want to miss it, especially if you're looking to maximize your returns.
Yeah, there's a lot to explore there. Thanks for joining us today, and we hope you're feeling inspired to take those next steps in your real estate journey.
Absolutely. Take care, everyone, and we'll catch you next time.